is moving. Faster, smarter, further. The conversations are changing. The questions are deeper. The voices are stronger. So, we ask ourselves, what should Africa sound like now?
Not louder, sharper.
Not more noise, more meaning.
Something powerful is coming.
A new standard for the conversation.
A new rhythm for the continent.
I love it. I love it for us. Oh my goodness. Please join us as we celebrate.
The African perspective is evolving. Catch it all next month, Monday to Friday, from before sunrise until long after sunset, only on Channel Africa.
Siyabangena manje. Vito iJabulani Nkolele iMagoda. Jabulani is a young man from Giyani in Limpopo in South Africa. Very easy guy, taking things easy. To know me is to know that I love what I do, which I'm crazy about it. So when you hear me on radio, expect the best. Expect great music. Expect great content. Expect 180 minutes of nothing but fun. You'll find me on the morning reset, 3 to 6 a.m., Monday to Friday. Siyabangena baba. Ay. Mbuleke.
Stella Longwe pamalonje.
Apa ndikatswiri oyimba wa dziko la Zambia ameneyu ndi Isaac Zulu. Isaac, apa pali nyimbo imene munayimba yomwe ikuti Manda Ambeta. Nyimbo imene imakamba zotani?
Nyimbo imeneyi ndinayimba zona ndikuchoka pasi pa mtima kama kakuona ma situation yena amene amachitika makamaka kukhala chikulisa achinyamata kapena azibambo tita azibambo. So kambiri chimapezeka kuti azibambo bena aliko amene amakhala ndi mitima ankhanza osadziwa mosamalira banja kuti wachikondi wanga ndifuna kukhala naye mnjira yotani kuti moyo wake ukhale wosangalala. Ndino zimafika pena zoti mwina wachimayi walemedwa nazo nkhanza za munthu wachimuna kapena kuti bambo naupamba. Yana mafika pa mtima pokamba mawu kuti ine munthu amuna anga pondikwatira ananditenga ku makolo sanatenge musi mwa mtengo. Ndino ni safe chifukwa cha chikondi. Kulibe manda ambeta ngakhale pita kumanda wina akafa munthu wokwatira kapena osakwatiwa sipamalembeka kuti pafa munthu amene sadalepo mbanja.
Tengatu wamphamvu kuti iyayi azibambo azisamalira bwino akazi osachitira nkhanza komanso azimayemera kuona mazunzo iyayi kulibe manda ambeta.
Malonje pa nthawi ya 6 koloko kufikira 7 koloko madzulo. Lowiruka ndi Stella Longwe.
Este caleidoscópio de Canal África. Com Remo Samo e João Yabalá.
O conflito militar envolvendo o Irão, os Estados Unidos e Israel provocou uma escalada acentuada nos preços do petróleo, especialmente devido à ameaça de interrupção do tráfego pelo Estreito de Hormuz, responsável por cerca de 20% do consumo mundial de crudo. Para países africanos dependentes de importações de energia, esta tensão não é apenas um problema econômico, mas também social, com impactos potenciais sobre inflação, custos de produção e acesso a combustíveis essenciais. Para perceber os riscos e possíveis respostas, falamos com o Dr. Lutumba Simão, economista angolano.
Para os países exportadores, vão verificar uma receita mais alta do que previam. E do ponto de vista de custo para as populações, vamos identificar que também pode aumentar a inflação, principalmente naqueles países onde de facto importam o crudo e os combustíveis derivados do petróleo bruto.
De segunda a sexta-feira, das 20 às 21 horas locais, este é o caleidoscópio do Canal África.
Business, trade, and investment opportunities that put the continent first. Africa in Business with Thami Ngubeni.
It is a very good afternoon to you, Egypt, Eritrea, Sudan, Kenya. Good afternoon to you, DRC. Welcome to Africa in Business on Channel Africa. I'm Thami Ngubeni. This is your Thursday edition. Coming up this hour, e-hailing drivers in Nigeria to intensify their protests as their 3-day strike enters its final stage with little to no response from Uber, Bolt and InDrive. And Ethiopian Airlines unveils a $50 million expansion of its domestic terminal This as the East African country positions itself as Africa's aviation hub. Do stay connected to Africa and indeed the world with Channel Africa, the international voice of the South African Broadcasting Corporation. You can watch or listen anytime, anywhere at channelafrica.co.za, on the Channel Africa mobile app and on SABC Plus, or via the DSTV and OpenView audio bouquets. You can also catch us on social media at Channel Africa on Facebook and Channel Africa One on all other platforms. Channel Africa, first with the African story globally.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We begin here this afternoon with a focus on the price of Brent crude oil. It remains volatile as a result of the war in the Middle East, surging to around $109 a barrel. Iran's Revolution Guards have threatened to target oil facilities in Saudi Arabia, the United Arab Emirates and Qatar. This after Israel attacked the world's largest natural gas field in the Persian Gulf, which is shared between Iran and Qatar. The latest escalation targeting energy infrastructure in the region has heightened concerns around the world as energy costs continue to surge. Iran has also confirmed attacks at its own facilities in Asaluya in the southwest region of the country. Sherwin Bryce Peace reports.
What's clear is that the targeting of energy facilities in the region will compound the supply disruptions being experienced amid reduced tanker and cargo traffic through the Strait of Hormuz. Some forecasts see the price of Brent crude oil reaching $120 a barrel in the coming days, amid continued disruptions. Iran's Tasnim news agency indicates that the Revolutionary Guard would target various refineries, a gas field, and petrochemical complexes in neighboring Gulf states, calling them legitimate and prime targets for counterattacks, as the UN's World Food Programme warns that the war could cause the worst disruptions to humanitarian work since the COVID-19 pandemic. Listen to WFP's Deputy Executive Director Carl Scow.
Our supply chains may really be on the brink of the most severe disruption since COVID and the Ukraine war back in 2022. Our shipments of life-saving food are being affected by the squeeze on trade. It is taking us longer to deliver by sea, and our costs have increased. Our shipping costs are up 18% so far. And we have thousands of trucks on the roads every day, and these are now running on much more expensive fuel due to the oil prices. Higher costs mean that we can buy less food or provide less cash to beneficiaries.
With some of the world's most vulnerable regions of particular concern, with the agency warning that the war could push millions of people into acute hunger by June.
The spike in global food and fuel costs could leave millions of families priced out of stable foods, particularly in import-dependent countries like sub-Saharan Africa and Asia. In fact, our analysis projects that if the Middle East conflict continues through June, an additional 45 million people could be pushed into acute hunger by price rises. This would take global hunger levels to an all-time record, and it's a terrible, terrible prospect. We have been forced to cut life-saving food rations for people in famine conditions in Sudan. We are only able to support 1 in 4 acutely malnourished children in Afghanistan, which is now the world's worst malnutrition crisis.
This as the US administration moved to loosen sanctions on the sale of Venezuelan oil in an effort to ease market pressures and energy prices. US companies would now be allowed, with some limitations, to do business with Venezuela's state-owned oil and gas company as part of efforts to boost global oil supplies. I'm Sherwin Bryce Pease in New York.
Africa in Business on Channel Africa.
It has gone exactly 15 minutes after 4 p.m. Central African time as we turn our sights now to Nigeria, where e-hailing drivers represented by the Amalgamated Union of App-Based Transporters of Nigeria, AUTON, working on platforms such as Uber, Bolt and InDrive, have intensified their protests as their 3-day strike enters its final stage, with little to no response from the companies. The drivers say they are now prepared to escalate action by picketing company offices if their demands are not addressed. At the centre of the dispute is a call for a fair review that better reflects the current economic realities. For more on this, we're joined on the line by Ayode Ibrahim, the president of Africa Platform Workers Representative, APWR, and the co-founder of the Amalgamated Union of App-Based Transporters of Nigeria. A very good afternoon to you, Mr. Ibrahim. Good to have you with us on Africa in Business. Could we maybe start with an understanding of you giving us an overview of just some of the demands that you've put forward to the e-hailing companies such as Bolt, Uber and InDrive?
Thank you so much, presenter. We have a numerous problems that we table for them, and they have not yielded to any one of those demands. Demand we bring on board is because of the active economy here in Nigeria. For example, the fuel pricing is up to roof now, and their commission, the commission is too much. In fact, we don't even know the actual commission we normally take when we have a ride from point A to point B. For example, the Bolt taking 25%, Uber taking 25%, at times 30%, depends on their calculations. All these are not open to us, how they come about it. And we have been writing a lot of letters, a lot of information, a lot of debate with them. But they have not once tell us the actual problems that we have been tabled before them. So this is what motivates us to have a mega strike here in Lagos. We have the one in Abuja last month. This one is Lagos. And Lagos and Ogun State, we call it mega strike. So these are the warning strike we are trying to give to call them orders so that they can be able to listen to us and hear us. Because the way things is going on, the business is not well for every one of us. Talking about the car part, talking about how to even buy a car. You must have a good car before you can operate in their platform. And they even change their time and condition every day. You don't even know what they will bring tomorrow. You don't even know what they are doing now. So these are the things that we are trying to tell them, that is open up the floor, put this business in the table, let everybody understand this so that it can be a win-win for every one of us. And they always blackmail us. When we're talking about price review, providing of rider, they will always blackmail us that we want us to, our customer, or get more money from them, or to pay more money because of all these things, which is not correct, because these are the sympathy they have with the customers. Nobody wants to pay higher price. So what we are trying to say is that they should come down with their commissions, come down to their commission to 10%, so that the driver can go home with a lot of money in their pocket and they can take care of other expenses, around their operations. Right. These are the things we are trying to tell them.
So, Mr. Ayode, have you received any sort of response to your demands from any of the three e-hailing companies?
No, as at now, there's none. They did not listen to us. They don't even reply us. They don't, talk to us. They call us independent contractors. But here in Nigeria, we have a union registered that take care of all these collective bargaining. They never recognize that union for one day. They never call us for table for one day. And it's very wrong of them, because Nigeria law is very clear about how to relate with a registered union, especially a multinational company or corporation that come from another country. But they have never respected our law. They have never respected the Constitution of Nigeria concerned to the labor law. These are the way they operate.
And how widely supported is the strike amongst drivers across Nigeria? Yes, you've mentioned that this one is currently in Ogun State as well as Lagos, and that last month you were in Abuja. But how many drivers are actually part of the strike, and what type of impact has this had on both yourselves as drivers and on the commuters?
Yeah, we have a majority of people join us. Everybody sacrificed this time around, because if at all you did not sacrifice, there is no money for you to buy fuel and be grinding your car up and down. So we have a lot of people, cooperate with this strike. And apart from that, the majority of the driver, they support it, both Lagos and Ogun State. And apart from that, even the app company, they feel the heat, because they don't have much of driver in their platform. So these are the things that make them to be think otherwise. But as usual, they always keep months. They always keep quiet, like doesn't concern them and what have you.
So I'm quite interested, before the strike actually took place, have there been any sort of formal negotiations with Uber, Bolt or InDrive in order to try and avert the strike?
As I already said, they don't care about what we talk, what we think, and what we are going through. What they care about their commission and the money they want to make out of us. And if you look at all these things very well, so most of the times when we make a noise to them, they don't see us as even the partner they call us. They don't see, because if you call somebody as a partner, you're supposed to listen and know the problem that they are going through, so that can be able to help one way or the other. But they don't listen and they don't want to hear anything. Meanwhile, these people are making a lot of money that many people do not know, and we just have only one place to make money: drive passenger from point A to point B and collect your money. But they make money in 3 places. They make money from our data, they make money from commission, they make money from inspections. Because when you do the government inspection, you have to take your car to their own special inspection again, and they still collect money from those inspections. When you look at this system very well, no matter whatever you look at it, if they don't even make money, for example, in Lagos State here, we pull in 2 million riders every day. Look at that, and we have 2 platforms. We have driver platform and we have customer platform, which is riders. And we burn our data through those 2 million every day.
So Mr. I'm sure it really does amount to quite a lot, but we're going to have to leave it at that for this afternoon. Mr. Ibrahim, thank you so much for keeping us up to date on the strike. Do you have an end date? When is this going to end?
Yes, I've already ended yesterday, but we want to start picketing if we do not see any results from them.
All right. Thank you so much, sir. Much appreciated. That was Mr. Ayode Ibrahim. He's the president of Africa Platform Workers Representative, which is APWR, as well as the co-founder of Amalgamated Union of App-Based Transporters of Nigeria. We'll continue looking at this Nigeria, situation as far as the, Uber, Bolt and InDrive drivers are concerned, perhaps from different perspectives as well, a little bit later on this afternoon. It's 23 minutes after 4.
Parlez-vous couramment le français? Êtes-vous passionné par la radio? Et êtes-vous qualifié pour travailler en Afrique du Sud? Envoyez-nous votre CV et vos 3 minutes démo en MP3 à @channelafrica.co.za pour avoir une chance de rejoindre la famille Channel Africa. Si vous n'avez pas de réponse après 14 jours, cela signifie que vous n'avez pas été retenu. Channel Africa, la perspective africaine.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
From Nigeria to Ethiopia, where Ethiopian Airlines has unveiled a $50 million expansion of its domestic terminal in Addis Ababa. This is more than doubling its capacity to accommodate rising passenger numbers amid a tourism boom and over 200 daily domestic flights. Meanwhile, Ethiopia is in discussions with the Export-Import Bank of China to secure funding for the proposed Bishoftu International Airport, aimed at easing congestion at the main entry point and further expanding the nation's aviation infrastructure. For more on this, we joined on the line by Merid Firikohannes. He is CEO of Pragma Investment Advisory. A very good afternoon to you, Merid. Good to have you with us once again.
Pleasure to be on the show again. Thank you.
So Merid, how significant is this new terminal in the broader growth strategy of Ethiopian Airlines?
Well, this is very much important. I think the reason they want to expand the domestic operation is 2 reasons. Number one is the airport right now, the capacity is operating at a full capacity, both on the international and then at the same time on the domestic side. It's already accommodating up to 19 million passengers annually. At the same time, because of the internal instability in some of the security problems and around the country, people are more preferring to use Ethiopian Airlines instead of vehicles or any other means of transportation. So that added a lot of pressure on the domestic traffic side in terms of people booking tickets in advance. Into sometimes it's getting a bit harder to get a ticket within a domestic flight within a week. And the other reason is the Ethiopian Airlines. I mean, since they are the only dominant player within the domestic aviation sector for quite a long time. There have been building a number of airports to interconnect the country with the capital of Addis Ababa. So that also adding a huge traffic as well. So with all this, I think expanding the domestic domestic airport was very critical.
And how does this then position Ethiopian Airlines against its regional competitors, the likes of Kenya Airways and South African Airways?
Yeah, I mean, it purely doubled down the momentum that Ethiopian Airlines have already gotten, right? Because mind you, Ethiopia it's the double size of Kenya, and then at the same time is one of the largest operator airline company in Africa, and mind you, and on top of that, it's building a $12 billion mega airport just down the capital city, just 40 kilometers down to Bishoftu, which is expected to be finalized after 4 years, which will accommodate up to 110 million passengers when the second phase is completed. The first phase is expected to be completed by 2028 or early 2029. At least it would accommodate up to 60 million passengers annually. So with all of this capital expenditure, I think it's going to position Ethiopian Airlines as the biggest airline company, which not only connect Ethiopia but also connect the entire continent with the rest of the world, and the rest of the world with the entire continent. Mind you, the Ethiopian Airlines also is also a minority shareholder in most of the major airline companies outside of Ethiopia as well, like DRC, also Nigeria, and also other northern, southern African, Central Africans, and also Western Africans airline companies.
So let's look at the deal, Mered. There are discussions that are currently underway with the Export-Import Bank of China. How much do we know about this? How far gone are these discussions? And are they likely to be on commercial terms versus concessional lending? And I ask this also in the backdrop of the current global financial condition.
Oh, that's a really good point that you mentioned. So let me say this. This has been a question that has been raised by the creditors and also investors, debt financiers across the world. So Ethiopian Airlines, at this point, it's safe to say, and I can say this confidently, it's by itself is a country. Okay, it has its own standard credit rating. It has its own different, stronger balance sheet. It operates and contributes a revenue of almost 10% of the GDP of Ethiopia. So any creditor, they're not worried about in terms of defaults or delays of payment. In fact, what Ethiopian Airlines has done is, the new airport is going to be first they will create a special purpose vehicle whereby the new debt is going to be signed on the new SPAC, on the new special purpose vehicle company, which later on paid from the future earning it's going to get. And because Ethiopian Airlines that is not attached with the Ministry of Finance and will not get any guarantee from Ministry of Finance of Ethiopia. So it has its own good credit standing, it has its own strong balance sheet, it has its own credit facilities with the like of JP Morgan, Citibank, and also other private creditors. So that by itself has given it a strong credibility to amass up to look for $9 billion. And as much as possible, the airline is as much as possible trying to onboard creditors on a commercial term, by the way, not on a concessional level. But one of the things that Ethiopian Airlines, the project team, they're pushing forward is if the contractor comes with the financer, usually export country agency financing, whereby the Export Import Bank of China on board with the contractor. So the Ethiopian Airlines is willing to give award the contract to the Chinese company if they bring on the finance as well. So that way, it makes it so much easier to build a facility, because mind you, the whole contract value is going to reach up to $9 billion. So that by itself is going to alleviate not only the construction element but also the financing element as well. So that's the ideal outcome that the airline company is working. And this is the same case, because the Chinese companies have done quite a number of airports, including the recent one is in Bahrain, which almost accommodated up to 100 million passengers. So they have quite a number of experience. That's what the Ethiopian Airlines, they're trying to mimic as well,
right.
for the Bishop International Airport as well.
Merid Frikuyan, it's always a pleasure speaking with you this afternoon. Thank you for that update as far as the developments with Ethiopian Airlines and their expansion plans, wanting and their ambitions really to be the continental aviation hub. Thank you so much, sir. That's Merid Firkuhanisi, CEO of Pragma Investment Advisory. Let's head over now to the markets desk for the latest market indicators. And joining us for this afternoon is Bontle Hedbosch.
Get the news, music, and lifestyle of Africa on Channel Africa, the African perspective. Business news on Channel Africa, the African perspective.
Thanks, Thami. Good afternoon. And our final look at the indicators this afternoon. $1 US is trading at 16 Rand 76 cents in South Africa. In Botswana, it's trading at 13 Pula 42. In Namibia, 16 Namibian dollars 76. The Zambian kwacha is trading at 19 kwacha 48. In Kenya, the dollar is trading at 128 shilling 52. Ethiopia 156 birr 21. In Uganda, it's 3,743 shilling. And in Tanzania, it's 2,600 shilling. $1 US in Nigeria is trading at 1,355 naira. In Egypt, the dollar is trading at 52 Egyptian pound 26. Tunisia, it's at 2 dinar 92, while Algeria is trading at 131 dinar 33. In Morocco, the dollar will cost you 9 dirham 28. Angola, it's trading at 912 kwanza, while the Congolese franc is trading at 2,246 to the US dollar this afternoon. Looking at commodities, gold is trading at $4,597 per ounce, platinum $1,915 per ounce, while Brent crude oil has inched a bit lower to $111.27 a barrel. And that's your indicators. For any business stories you'd like to share with us, please do send us an email to newsroom@channelafrica.co.za. Give us a call on +27 11 714 4459. For the Channel Africa Business Desk, I am Bontle Hedbosch.
Business news on Channel Africa, the African perspective.
And for the business of sport, a very good afternoon to you, Musebudi Makura.
Sports on Channel Africa, the African perspective.
Thank you so much, Thami. A very good afternoon indeed from the sports desk. Well, Live Golf is underway at Steyn City in Johannesburg in South Africa's Gauteng province, making its first appearance on African soil and also completing the league's expansion to 5 continents. So approximately 90,000 tickets have been sold for the 4 rounds, with the crowd expected to rival those seen at Live Golf Adelaide in Australia. So South Africa is projected to generate $47 million in economic activity from tourism, hospitality, local spending, taxation, as well as international exposure by hosting the event. South Africa's cabinet formally approved the hosting of the tournament. The direct economic impact per event has been estimated at between $29 million and $49 million, with a broader projection at reaching $59 million once indirect activity is factored in. Now, the Minister of Sports, Arts and Culture, Gayton McKenzie framed the tournament as a demonstration of South Africa's capacity to host global events, telling a media briefing in Pretoria, the capital city, that it carries a message about the country's openness as a destination for sports, tourism, as well as culture. So across its 14-event global schedule, Live Golf says its tournaments have generated more than $1 billion in economic impact for host cities worldwide, reaching broadcast audiences exceeding $900 million households rather. Now the Adelaide comparison is instructive. So since its inception in 2023, Live Golf Adelaide has injected more than $217 million into the South Australian economy, with the 2025 edition alone contributing a record $81 million and hotel occupancy rates climbing above 85% during the tournament week. Now, South Africa's tourism authorities are targeting a similar outcome. According to Now in South Africa, the timing of the Johannesburg event just ahead of the Easter travel period is being used to promote extended travel packages across visitors to stay from between 8 and 14 days, of course expanding economic activity well beyond the tournament footprint itself. Meanwhile, Dr. Shamila Chetty, the acting CEO of SA Tourism, says they have worked with the business sector ahead of this tournament.
Worked with our business sector partners to put to those sites curated travel packages for the specific tournament. We also have 6 tour operators who will be at the tournament itself for the 80,000 odd spectators who will be there over those 4 days to be able to engage directly with them. As a general rule, what we do as the South African tourism is that we work really closely with the private sector to make sure that our South African travel and tourism industry is able to take maximum advantage of any type of events, and in this case, this particular international golfing event.
Now, CAF's decision is already creating betting disruptions and leading to new questions over the governance as well as the credibility of African football's flagship tournament. Now, the gambling industry is among the first feel the impact of CAF's ruling just a few days ago, shortly after the decision was announced that Morocco have now been announced as the winners of the Africa Cup of Nations tournament this year. Bettors turned to bookmakers to ask whether wagers on Morocco would now be paid out. Now, several operators have chosen to do so, with Paddy Power labeling it as justice payout. Another example is the Betclic, which are confirmed it will pay out on all the bets placed on Morocco to win both the tournament as well as the final. However, many bookmakers have already paid out bets on Senegal to win the AFCON and are unlikely to recover those losses. There's also further uncertainty, with Senegal now planning an appeal with the Court of Arbitration for Sport, raising the possibility that Morocco could still be stripped of the title. Now, questions also remain over other areas, including whether players would be required to return the medals, how prize money would then be handled, and also what happens to the trophy itself. And finally, Real Madrid have successfully secured its most significant long-term commercial asset by reaching an agreement to extend its partnership with Emirates until 2030-2031 season. The renewal ensures that the Dubai-based airline will remain the club's primary sponsor for an additional 5 seasons beyond its current expiry date. Now, the new partnership will also bring in approximately $84 million annually. Now, this represents a notable increase in guaranteed revenue compared to the previous contract. The timing of this renewal is crucial for President Florentino Perez's board, especially given just how Real Madrid's interim financial statements reveal a complex physical picture. At 16:40 p.m. Central African Time, and that's a wrap from the Sports Desk at the Sawa. For any sports stories you'd like to share with us, remember to send us an email to newsroom@channelafrica.co.za or call us on +27 11714 4459. For Channel Africa Sport, I am Mosibudi Makura.
Sports on Channel Africa. The African perspective. keep Africa in your hands. Connect to our website for all your news, sports, and cultural updates. channelafrica.co.za. 60 years of Channel Africa. Your trusted voice, your African perspective into the future. Stay ahead with Africa in Business, where Thami Ngubeni unpacks your go-to source for Africa's economic trends and development.
Thank you to Bontle Hedbush and Mosebudi Makura. They bring us to exactly 4:41 Central African Time. Now, the South Africa Innovation Week 2026 is currently underway in Johannesburg, South Africa, bringing together over 150 innovators as well as key partners in order to showcase the country's growing technological capabilities. With participation from organizations such as Enterprise Ireland, the Development Bank of Southern Africa and the Johannesburg Stock Exchange, the event aims to drive collaboration. It aims to spark dialogue as well as strengthen South Africa's innovation ecosystem through nationwide activations. Channel Africa's economics reporter Innocent Samosa has more.
South Africa's Deputy Minister of Science, Technology and Innovation, Dr. Nomalungelo Gina, has urged funders to stop rejecting innovation applications without feedback.
To the funders that are here today, can I directly speak to you? Especially the government-owned funding instruments like the likes of Innovation Fund, the IDC, the NEF, the PIC, and more of other funders. We are here to serve. I repeat, we are here to serve the people of this country.
Board Chairman of the Technology Innovation Agency, Loiso Tjiga, outlines the practical impact the event is expected to have on South Africa's innovation ecosystem.
As part of the Tier 2.0 strategy, we call ourselves the convener of the innovation ecosystem. And what we are doing here is part of that, is to convene the quadruple helix models and all the players, and let's say this is how we see this work, and hopefully what then comes out of this translates into agreements and contracts. And with the innovators that are here, for them there's pitching sessions, there's networking opportunities between funders, investors, VCs, innovators, incubators, and the entire ecosystem. So really the aim is to get the ecosystem in one space. Let's have the same agenda for what we call sovereign tech development.
How important it is for South Africa's Treasury to prioritize funding for innovation?
This is a very important question. In fact, the president last year made a bold statement that the money that the portion of GDP that should be allocated to research and development, which innovation is part of, should move to 1.5% of the GDP. Countries that do well in innovation and innovation output are sitting between 5 and 3%. We are 0.6%. So we are far from being enough, but we also understand that they are, government has to prioritize based on their own societal pressures.
Founder and CEO of A-Gain Business, KK Diaz, shares insights on the biggest barriers innovators still face when scaling their solutions in South Africa.
I think one of the biggest problems is really using old ways of growing businesses. You know, it's 2026, it's not 2009 anymore, where, knowledge was the biggest stumbling block. Knowledge wasn't accessible. Everyone's got smartphones, everyone's got data, connectivity, at least access to, enough of the innovators. But the problem is, how do they take that knowledge and translate it into execution?
For Channel Africa News, I'm Innocent Samosa in Johannesburg.
Africa in Business on Channel Africa.
It is exactly 4:45 Central African Time. I'd indicated a little bit earlier on this afternoon that we are going to be focusing quite in-depthly into the strike, the e-hailing strike that's taking place in Nigeria. You'll remember earlier on we spoke to Mr. Ayode Ibrahim, who is the president of Africa Platform Workers Representative, which is APWR, and he's also the co-founder of Amalgamated Union of App-Based Transporters of Nigeria. He gave us a good understanding of where the strike is at right now. He did indicate that it was a 3-day strike. It has now come to an end. They've had no response whatsoever from the executives of the e-hailing companies. And should they get no response, they will then picket outside their offices. That is what he has earmarked as the next move. He did highlight that the strike did take place in Abuja and is now currently taking place in Ogun State as well as Lagos. We'll be focusing on this a little bit more this afternoon. Do stay tuned to Africa in Business. We'll be back in just a moment. Also, under the radar today is the issue of inflation in South Africa, where South African consumers are said to be able to breathe a bit of a sigh of relief as far as inflation is concerned. It's eased from 3.5% in January to 3% in February, although because of the geopolitics and because of the instability as far as oil is concerned, that this may not be long-lived. We'll be focusing on that and a whole lot more on Africa in Business.
Growing with Africa for 60 years. Channel Africa celebrates 2026 with the African perspective. Channel Africa is moving with the times, and so is our WhatsApp line. We've changed our WhatsApp number, making it even easier for you to stay connected. Send us your voice notes, comments, shout outs, and song requests to our new WhatsApp number, +27 83 288 6684. That's +27 83 288 6684. Save it, share it, and stay in the conversation. Channel Africa, the African perspective. Africa in Business on Channel Africa.
It is exactly 4:47 Central African time. South African consumers can breathe a bit of a sigh of relief, even though it's just momentarily, as inflation eases from 3.5% in January to 3% in the month of February. Analysts, however, say the positive momentum in the form of lower prices is expected to take a negative turn amid the ongoing crisis in the Middle East. The latest data released by Statistics South Africa shows that contributions to the 3% annual consumer price inflation rate came from housing and utilities, from food as well as non-alcoholic beverages, as well as insurance and financial services. This latest print brings the inflation rate in line with the Reserve Bank's new 3% inflation target. SABC economics reporter Naledi Mabitsela Ngobo has more.
The latest inflation data released by Stats SA has not accounted for the Middle East war and still indicates a moderating food inflation path underpinned by ample domestic grain, fruit and vegetable supplies. The data shows that the annual rate for food and non-alcoholic beverages declined to 3.7% in February from 4.4% in January. Stats SA's Patrick Kelly also attributes the lower inflation rate to delayed medical aid rates.
This February's monthly print was lower than average for the month, and we attribute this to three main factors. First, there was a delay in the implementation of some new medical aid rates. Most medical schemes increase prices at the beginning of each year and are surveyed by Stats SA in February. This results in higher than average monthly rates. In February 2026, however, not all medical schemes had adjusted their contributions. This delay resulted in a lower monthly change in the CPI than might otherwise have been the case.
Chief economist at Agbiz, Wandile Sihlobo, says the favorable rain conditions boosted grain harvest, while the easing of meat prices from 13.5% in January to 12.2% in February is encouraging.
On a meat side is something that we always worry about, especially with the foot and mouth disease. that is underway. But of course, the slaughtering hasn't stopped. We are still encouraged with the slaughtering figures that we are seeing across South Africa. And we hope that as the year continues, the slaughtering will hold up. The other positive, at least in food price inflation, which is the rate at which food prices are increasing, is that there will be base effects, which may support the slowing in the second half of the year of mid-price inflation. So overall, the picture looks favorable. But there is one factor, though, that may disrupt this moderating path, and that is the fuel prices.
Independent economist Elise Kruger says with the US, Israeli and Iran war pushing up the price of Brent crude oil, inflation is expected to rise to around 4.5% by April on the back of imminently higher fuel prices.
Inflation will in April most probably spike towards about 4.5% once we get the significant spikes in petrol and diesel. Depending on the actual outcome, those could be as bad as 6 Rand to the litre for petrol and about 10 Rand for diesel if the current levels of oil and Rand prevails for the remaining trading days of March. That will unfortunately, be a significant shock to the economy in the sense that companies won't be able to absorb this cost. So it will most probably result in a second round effect on inflation, i.e. that a broader number of items will see price increases as a result of the higher fuel cost, most notably on the food price side.
Analysts say the Reserve Bank is unlikely to increase interest rates given the moderate inflation outlook, while the war is also expected to be short-lived, therefore having a temporary impact on inflation. I'm Naledi Mabitsela Ngcobo in Johannesburg.
Be inspired. Stay informed. Channel Africa, the beauty of life. Now available anytime, anywhere with our new app.
It is exactly 4:52 Central African time as we get ready now for Vue d'Afrique coming up in a few minutes. We say bonjour to you, Madame
Bonjour
Joël.
à toi, Thami. Bonjour à tous les auditeurs de Channel Africa. Sur Vue d'Afrique, tout à l'heure, il sera notamment question de l'armée tchadienne placée en alerte maximale après la mort de moins 17 personnes victimes d'attaques de drones en provenance du Soudan. Et nous parlerons aussi des 115 millions de dollars. C'est la somme que le Rwanda réclame à la Grande-Bretagne après l'annulation de l'accord sur la réinstallation des réfugiés. Et en deuxième partie, avec Julino Songo, en sport, il sera notamment question de la réaction de l'ancien président de la Fédération sénégalaise qui a réagi à la décision de la CAF. C'est tout à l'heure sur Vue d'Afrique. Merci, Thami.
Merci beaucoup. That's Joël coming up with Vue d'Afrique at the top of the hour.
African enterprise meets global opportunity. Africa in Business on Channel Africa.
So Nedbank has partnered with Crypto.com in order to leverage blockchain technology as well as digital assets in developing innovative payment, settlement and liquidity solutions across the African continent. The collaboration positions Nedbank as a premier gateway for secure, regulated blockchain finance on the continent, but it enhances transparency as well as efficiency in cross-border transactions and marks a transformative step in the region's financial landscape. For more on this, we joined on the line by Simon Marland, Managing Executive responsible for automation, blockchain and analytics at Nedbank. A very good afternoon to you, Simon. Welcome to Africa in Business.
Yeah, good afternoon to you too.
Good to have you with us today. So how does Nedbank's partnership with Crypto.com fit into the bank's broader digital banking and innovation strategy?
Yeah, I think from a digital point of view, obviously we've had some legacy systems, and obviously digital and digitizing is clear in Nedbank. But I think the blockchain web is particularly a new way of financial systems of moving money up and down across continents, across different countries. And I think the easiest way of explaining it, if you talk about legacy banking systems with their digital front ends, we're building at the same time a different highway, which is both private and public. And it's the on and off ramps between the old way and the new way, and then being able to navigate that as technology changes and as different people use those different ecosystems. So imagine old banking being a highway, and imagine blockchain enabling it as a technology, an easier, quicker way, and more transparent way of doing things. And then imagine from a Nedbank point of view, our strategy is to build on and off ramps between those two to be able to navigate speed against risk and compliance and stuff. So again, when you're doing these and you want to embrace new technologies, we mustn't forget about the risk and compliance legs and all the regulatory standards.
And what are the specific opportunities that Nedbank sees in the growing cryptocurrency ecosystem?
Yeah, so typically maybe moving ZAR into Africa and offboarding, onboarding. If you take a typical people sending money to a different Africa country, those things generally take 3 days or 4 days. So with blockchain technology, you could probably do that in minutes, but obviously you need to make sure that the regulatory and risk side is all covered. So a bit of opportunity on what we call cross-border payments. A lot of opportunity potentially on treasury and where we move dollars to and from different banks. And then probably like a couple of POVs and POCs is probably enabling some of the agriculture market to be able to get easier payments and possibly tokenize some of their crops and stuff like that.
I mean, you mentioned this a bit earlier on the concerns around risk and how you plan to mitigate that, and acknowledging the fact that cryptocurrency does remain highly regulated and sometimes very volatile. Is how the space is being described. How are you as Nedbank managing those risks in the partnership?
Yeah, I think if you look at what's happened in the world in the last couple of years, the regulation around crypto or blockchain has probably not been ahead of the technology. So I think as acts like the Clarity Act in the US and as different countries add them to regulation in South Africa, we have CASP licenses for people who do crypto exchanges. The regulation and compliance has been catching up, and therefore what's happened is it's been shaking out some of what I would call the shady players. That space is obviously still evolving, but the 2 years or 3 years, in the last 2 years or 3 years, the amount of regulatory oversight on blockchain technology, and I'm saying blockchain technology because typically when everybody thinks of blockchain, but they talk about buy, sell Bitcoin. That is only one use case, and probably a use case where you're exposing people to the volatility of what happens in Bitcoin or other cryptocurrencies. From a bank point of view, we're looking at more of embracing the technology to fast track some of the legacy way that we do things currently.
So it's really about speed and efficiency for Nedbank.
And transparency and security.
And transparency and
let's
security. All right, so those are the 4 pillars then, I guess. Thank you so much, Mr. Simon Marland, for taking us through that partnership between Nedbank and Crypto.com and what it aims to do for not only the various partners involved, the 2 companies, but also for the consumer across the border. We thank you for your time, sir. That's Simon Marland. He's Managing Executive responsible for automation, blockchain and analytics at Nedbank. Well, that's how we come to the end of this Thursday edition of Africa in Business. We didn't quite manage to get back to that Nigeria story. If opportunity allows, we certainly will continue looking at it. You'll remember they said they'll be picketing. Will they be picketing? Hopefully that's a story will continue. It is a developing story. From myself, Thami Ngubeni, and the entire Africa in Business team here on Channel Africa, give yourself a splendid evening further. Reste connecté as a Voodoo Freak comes back on.